Yeah, I'm sort of wondering, the thing I think of as a value investor, we're very different than you because we're quantitative value
Yeah.
investors, but we're both trying to buy based on value. Are we in trouble until these things reverse? So if the Fed continues to do what it's been doing, and you can argue that a lot of the consequences of what the Fed is doing will be felt more in the long term, and maybe more of the benefits are in the short term. So they might keep doing it for a while. And if these fund flows don't reverse, if more people keep getting passive, and they keep putting more money in the bigger stocks, do we need those things to reverse for us to do well, or can this get to such a point that it gets so out of whack that we can do well even if they don't?
So I think we may approach kind of the 99 2000 point at some degree, where if in 2001, if you were a value investor, that was one of the best years. It paid off all the previous pain you suffered through. You got paid off handsomely. So we may get. So the thing is this: the price to earnings is a pendulum. So when your return comes from price to earnings going up, price to earnings is a pendulum that at some point when it stops going up, it actually doesn't just stay there. It starts swinging to the other side. In fact, my first two books, the Active Value Investing and Little Book of Secondary Markets, that's what they talked about. I studied that, and I realized that it's historically price to earnings went from below average, through average to above average, and when it mean reverted, it didn't just come back from above average to average. It's historically usually went to below average. So I would argue that I don't know when. So you asked me a question of when, and I have no idea. And I'm basically investing as if the music will stop at some point. The famous words of Chuck Prince of Citigroup was, why was he doing crazy loans in 2007, 2008? He said, well, we were dancing while the music was playing. And if you are responsible managing somebody else's money, that's not the right thing to do. Though it's been I would argue it's been a more successful strategy than just being responsible over the last 10 years. But I think people come to me, and I'm sure it's the same thing with you guys, and say, this is my life savings, don't screw it up. I can't be dancing just because the music is playing. So what I'm trying to do, is buy high quality companies, make sure they're undervalued. And I know that at some point this will produce hopefully superior returns.